Hey everyone, I am back. Welcome to the market review. Big news of the week is that drop on Friday. Initially in the week, we had another AI trade circle jerk pump from AMD this time, and it kept the market going higher once again. But on Friday, we had Trump wake up to tariffs again, escalation with China. We have more shutdowns, things going wrong with some layoffs. And it seems to me like the Trump administration is actually trying to put us into a recession. My thesis until now was that we would be getting sort of a reacceleration, slight one, but still there in the coming months, because we had the tariff shock from April, and you know that saying about the market bottoming 6 months before a recession. This is 6 months from April, and this is generally because it takes around that much time for people and businesses to adapt to the new normal, especially when we get kind of a shock event type of recovery, like even COVID. Uh, we had March, and by September the economy was kind of doing okay, and we saw continuation in the bull market after that. So, given this, adding another shock just when people were getting adapted to the new environment is a very big negative event. It's not like the jobs market and the economy were doing great. They were okay, but not great, especially the jobs market. If you add more people from layoffs because of the shutdown, or you have people spending less because of fears from the shutdown, like government employees for sure because they're not getting paid. Some of them have been threatened that to not be back paid as well. So they will be fearful of spending. So that recovery that I was anticipating because of the Trump policies is likely not going to materialize, and the fact that they're amplifying layoffs with their own policies again is not going to help the jobs market. So getting another plus now another 100% on China tariffs as another shock to US businesses who rely on stuff from China, again, not a good thing for the economy. And we are in a it's a much more brittle economy than it was in April when the initial shock came in. So given the impulsiveness of the move and the amplitude of the move, because it was like a 4% swing on a daily basis from peak to bottom, this is very likely to be a multi-week move, and it's very likely to be a multi-leg move. So we will get a bounce, and then we will go lower. I left you guys with this when I left. Reposted this. Generally speaking, when we go above the 21 EMA in a bull move on the weekly, we don't often go beyond 20 weeks of upside. And we were at 20 weeks the week when I left, so not this one. And then we usually get like a 2 to 3 week pullback after that. And lo and behold, this is what happened here as well. The 21 EMA on the weekly is now 632.85, and this is the baseline target. I am 100% that we will hit this within the next 2 weeks. Most likely next week, obviously, but it seems impossible not to have this reconnect with the 21 EMA sometime in the next 2 weeks. The way it can happen can vary quite a lot, and I think there's a couple of scenarios that we will be discussing very soon. I marked a couple of these types of moves on the SPX chart. No? Oh, no, sorry, on US 500. So we had this one here from counting from here, then a 3 week pullback. We had this one with another 3 week pullback. We had this one, which I'm counting from here because uh, I think this is a valid, even though it didn't tag it, I think it's a valid pullback to the 21 EMA, even though it was slightly higher. And again, 1, 2, 3, 4, 5 week pullback before we started a new one. We had the COVID one at 17 weeks, which was a big drop, and this one from 2018, which was 20 weeks actually, if I count from here. no, 21 weeks, sorry. And then another move down, it was 12% move down. And I think we are the most similar to this one, even though we didn't go exponential here and go super overextended. But the amplitude of the move is so large that uh, it's difficult to be bullish about it. So 394 from peak to bottom as a candle. So almost a 4% candle from top to bottom. It's a very impulsive move and it's a very large move. Um, Aside from this, we know a couple of things, like for example, the AV up from a major low will 100% get tested at some point in the future. In this case, we are at 595, so basically 600. On SPX, I think it's different, maybe like this, 6100. So somewhere around 6100 could be the target. Now let's talk about a bit about scenarios, because there are a few, and let me put the AV up on this one as well. I want to put it on the candle with the lowest closing price, which is this one. Okay, and this is a 21 EMA. This is the AV up. If we get the full AV up retest, it's going to be something like 9%. If we get the 21 EMA only, oops, it's going to be like 6% from top to bottom. Now, uh, another thing we notice here is that the trend line that we've been highlighting here has held. Now we have a supply area in here because of the huge drop and how fast it went. This is now a trapped supply, meaning people who bought here will likely be very happy to get out with a small loss or break even. This means that when price gets to this area, we will very likely get a rejection somewhere in this area, and then we get acceleration down. So the way we can get the full correction is a bit, like I said, can vary a lot, and we can even get like a full V. If we get a full V, most likely we will get a rejection in this area, and then we will go back to the 20. We will go to the 21 EMA. So this now, because of the move down, this is a very slam dunk short kind of setup. If for safety, you can buy like 3 months out. But I expect the move to happen within the next month. So if we get a full V recovery for some fucking reason, and we get back to this area, shorting here is a very high expected value trade in my opinion, and we should be targeting the 21 EMA at 632 right now. It will be slightly higher as time passes. But if we get the full V, this is how I expect it to play out. Then secondly, we go directly to the 21 EMA, second option, and it will be something like this. Uh, this is very likely to be a bounce point. Like I said, it's going to be a multi-week move and it's going to be a multi-leg move, meaning we won't just go down like this, a full vertical move down. We will get bounces, we will go up, we will go down. So if we get to the 21 EMA, let's say on Monday directly, intraday, I fully expect a bounce from the 21 EMA, and we go back, like we could even see like a full V. This would be a scenario which would look similar to the 2021 top. This was the correction there. Like if I put it on the weekly, you will see what I mean. Actually, let's go to US 500 and let's go to 2021. So this is the 2021 top. We had kind of like a warning shot here. Then we went higher. Then we went sideways. And then the actual correction happened. So there is a possibility that we get this type of behavior in our case as well, meaning we uh, we go to the 21 EMA, we bounce, we potentially even go higher, but in essence, it will be like a sideways. it will be a move down, do a recovery, then go sideways. That sideways meaning it can also be a bit higher. So we go down, we bounce, we go here, maybe overshoot a bit, and then we go in a sideways range, leaning towards lower highs until maybe like December end of year. And eventually we will get that correction that is 10% or more, with the target to be at the AVWAP from the low. This is basically every AVWAP from a major low will get retested at one point in the future. So in this case, it will be something like this. Uh, and finally, the scenario that, in my opinion, looks more likely right now is that we go directly to the AVWAP from the April low. We get it, a retest from here. And then why I think this is the case right now is because of the amplitude of the move. Like this is way too big and too impulsive not to have continuation down. And I expect this to happen maybe as quick as all the way to next week. So we would go to this 610 area, then we bounce, and then we can potentially even do a new leg of the bull market. Depending on how things play out, it can be like a single move or it can be like a retest kind of thing, and do something like this. A W bottom would be a lot more convincing from the perspective of another significant bull leg, like equivalent to this. If we do like a W, and again, I will use 2021 as an example, like this was the last W that we had. Come on, click. And we had this huge bull recovery. I'm gonna say from April until September. And this W enabled another big leg up from basically November 2020 until January 2022. So if we get this type of W move here, it would be very constructive for the continuation of the bull market for quite a long time, like at least until March for another significant pullback. And the W would likely be something like uh, October until November OPEX. So something like go down next week and actually meet the 9% drop. Can't click this shit, man. So go down here, bounce. I don't know if we get a full V. I would expect not. Something like this. And then into November OPEX, we get a W, maybe slightly lower, higher low. And then this would be this would be a V move back up. And once we break out of this, it would create conditions for another sizable bull leg, like something like this. So target would be 730-ish, something like this, if we were to get like a W. If we get a single move, it is still possible, obviously, but uh, I would be like W is more it's better because it shows that the lows were tested twice, and in both cases we found buyers. Finding buyers here is more like and going higher is more like a reflexive move, but it doesn't deny the fragility of the market. Like it will still be a fragile market, like we have discovered this week with this 4% swing, and this can happen again. I think it would be more like a sideways scenario than a breakout, or go something like this until the end of the year and then break out later in the at the beginning of next year or something like that. So I don't believe in the a single V recovery that goes higher. It will still be a fragile market and would be prone to a pullback very soon, especially in January. But if we get to like a double retest of the lows, and both times it gets bought up, I will be very confident in going back to the highs and then a breakout. And that breakout can go a long way. It's not going to be like here, it's going to be more spread out. But this 630 is just the initial target. I think it has the potential to go even higher. It will most likely be something like this. I don't know, something like this. We shall see. But this is kind of the setup. So we have multiple scenarios. Very confident that we will get at least a 21 EMA retest in the next 2 weeks. The main scenario, which is I think a 70% scenario, is that we will tag the AVWAP and then we bounce. Very high certainty bounce when we get the 21 EMA. Basically this, we bounce and then we go maybe here, and this will make it a multi-leg drop as well. So basically drop, bounce, and then a new leg. And this is kind of the thing that we need to see for the market to consolidate. And then we'll see if we find buyers at the AVWAP here. So that's it for this week. Hopefully it helps. Yeah, have a good one. Bye bye.